Welcome to your March 2025 market update. Buyer demand has increased across most metro areas this period, with notable improvements in both core and suburban regions. This broad-based recovery suggests renewed buyer interest, potentially driven by improved affordability and a more favorable economic outlook. While inventory shortages persist, the overall market is showing signs of stabilization with increased activity across multiple geographic areas. The Home Demand Index for this report period is 74, reflecting a significant increase from last month's 65, but slightly below last year's index of 76. This suggests a rebound in buyer activity month over month, potentially due to seasonal market shifts or improved affordability. Despite the slight year-over-year decline, demand levels remain relatively stable, indicating consistent buyer interest across the market. The current Home Demand Index stands at 74, an increase from last month's 65, but slightly below the 76 recorded during the same period last year. The month-over-month rise suggests a rebound in buyer interest, while the slight year-over-year decline indicates relatively stable demand. However, low inventory levels continue to constrain buyer options and moderate overall market activity. Demand for luxury single-family homes saw a sharp increase, rising to 89 from last month's 63, indicating a significant shift in buyer interest. Mid-market single-family homes followed, reaching 61, up from 53 last month, but down from 67 last year. The diverging trends across home segments suggest that mid-range and higher-end properties are experiencing stronger demand. This growth coincides with an increase in inventory compared to last month, potentially providing more options for buyers. Demand for luxury single-family homes saw a sharp increase, rising to 89 from last month's 63, indicating a significant shift in buyer interest. Mid-market single-family homes followed, reaching 61, up from 53 last month, but down from 67 last year. The diverging trends across home segments suggest that mid-range and higher-end properties are experiencing stronger demand. This growth coincides with an increase in inventory compared to last month, potentially providing more options for buyers. The index for entry-level single-family homes is 67, up from 61 last month, but slightly lower than last year's 69. This increase from the previous month indicates a modest rise in buyer activity, though demand remains weaker than the same period last year. The category remains limited, with ongoing inventory shortages and affordability concerns continuing to influence market conditions. The index for mid-range single-family homes stands at 61, up from 53 last month, but down from 67 last year. The month-over-month increase suggests a slight rebound in buyer activity, while the year-over-year decline indicates a weakening in demand. Despite the recent decrease, the market for mid-range homes remains relatively stable, with consistent demand in this price range. The index for luxury single-family homes is at 89, up from 63 last month, but lower than last year's 100. The month-over-month increase suggests a recent boost in demand, while the year-over-year decline indicates softer market conditions compared to the same period last year. This shift may reflect market adjustments or seasonal trends affecting luxury home demand. The index for entry-level condos is at 98, up from 90 last month and 93 last year. The month-over-month increase indicates growing demand, while the year-over-year rise suggests sustained buyer interest in this segment. This upward trend may reflect stronger market conditions or increased affordability relative to other housing options, despite potential seasonal fluctuations. The index for luxury level condos is at 121, up from 113 last month, but slightly lower than last year's 123. The month-over-month increase suggests a slight rebound in demand, while year-over-year decline indicates a slowdown in luxury condo activity compared to the same period last year. This shift reflects a cooling in buyer interest, possibly due to market adjustments and affordability concerns. The index for townhouses, row houses, and twins stands at 73, up from 66 last month, but unchanged from last year's 73. The month-over-month increase indicates a rebound in buyer interest, while the stable year-over-year figure suggests demand has held steady despite ongoing affordability challenges. Limited inventory and sustained buyer preferences for attached homes continue to support this segment. Now let's look at today's interest rates. 30-year fixed is at 6.79%. 15-year fixed is at 6.16%. 30-year jumbo is at 6.92%. Our 30-year FHA is at 6.21%. And our 30-year VA is at 6.22%. I hope you enjoyed this month's market update as the spring market is at its peak. If you or anybody you know would like to buy or sell your home in the spring market for 2025, give me a call or send me a text. I'd be happy to assist.